My name is Rami. I'm the CEO and President of Messaben, and thank you for attending this presentation. So before we start, this is a disclaimer, and mainly the disclaimer is about the words used in estimate, expect, believe, and you'll have all the time to read it once we publish it online. So about Messaben. So Messaben actually was created to focus on the two aspects. One, which is produced water and reuse, and the second one was using technologies, unmatched technologies in the oil and gas to access geothermal and deeper wells. So Messaben was founded in 2020, September, with a capital of $4.5 million that was used for the acquisitions and a working capital. The company recently completed a reverse merger in December 2021 and is currently trading under OTC as MSBN. We have 95% ownership of the outstanding stock and 99.1% of the voting shares. The company also owns 25% of Infocus Energy Canada, an engineering firm that has been engineering and building the latest fluid-driven downhole technologies, which is the all-metal product, and it's the only product in the world. As the only patent metal-to-metal downhole motors, additionally, Messaben also is a global distributor for the Mark Corporation, which is the patented hydropods that are used in the produced water treatment and reuse. And the word reuse means it's economical to reuse it back again. About myself, I've been in the oil industry since over 28 years, moved around from NOV and Weatherford, mainly in the Eastern Hemisphere, from Middle East to Africa to Europe, and basically at the same time also, I'm the CEO and I run the Messaben Group as CEO and President. So my specialty was always in the upstream and processing, which led us to actually find out what's the sweet spot in the oil and gas and the agony and the challenges of the operators. And that's why Messaben, when it was launched, we wanted to know what are the most and biggest challenges that the customers has, and water stood out as one of the biggest. So what are we solving? And today when we talk about what we're solving, we're talking about two things. One, water sustainability, which is a big issue in all in the industries, not only oil and gas. And the second thing is decarbonization. So both are linked, because when we deal with water, that means you're using equipment to transfer that water, to transport it, to haul it. And this is emissions and CO2 being launched in the air, which does not help the global goals of 2014 Paris Agreement. But at the same time, we have a big problem in wastewater. So wastewater, and each continent has its own story. For example, Middle East is the scarcity of water, so as western area of the States, California, Nevada. And in other continents, it's the environmental impacts. Such, for example, in the mining industry, same as the oil and gas, they could shut you down because basically you're infringing, or because of the environmental pollution that is being caused. So it is an additional cost. The second thing is when we talk about drilling and intervention, the accessibility to geothermal wells. This is the new trend. It's been going there. It's increased about 200% for the last 3 years, associated with the same renewable energy transition. So we wanted to be in that game, and this is why we chose to acquire Infocus Energy, which has the only downhole metal-to-metal products. That means it can endure extremely high temperatures, and which saves also on drilling time or intervention time. Again, back to decarbonization is the same story. So what is produced water? This is a term used in the oil and gas. You can say wastewater, contaminated water, but produced water is basically water that has 10 contaminants. And the biggest challenge in produced water is that the components and the contaminants that exists is very harmful to the environment, to the point that every operator or company they have to dispose that water out, one way or another, whether drill wells, deep wells, dispose it, whether make ponds. In the end, you have a full cycle of transportation, equipment to be treated just to get rid of that water. And again, that's not only in the oil and gas. In the mining industry, it's the same thing. I mean, even if your acreage and concession is limited on an area, you still have to create ponds to evaporate and recycle that water, which is additional cost. We find it also in the dairy product manufacturing. We find it also in the power plants, cooling water blow down from the power plants itself. So wastewater, produced water is everywhere. And that's one of the things that when we identify what's the market and how big it is, produced water in the oil and gas is about 250 million barrels a day versus 100 million barrels of crude oil a day. And that number is increasing dramatically because of the aging, which we're going to be seeing later on, of the concessions and the assets. So where does that wastewater or produced water comes from along the cycle of oil and gas? So natural occurrences is water comes from the reservoirs. You don't have crude oil or gas coming alone. It is always associated with water. This is one. Second, if you were using fracking, there is something called frac flowback, which is very, very harmful to the environment. And that's another wastewater. Also in the processing itself, when crude oil comes out, crude oil is just not sold to the refinery. You have to process it. And this is where they use water, wash water, in order to get rid of the salts and other contaminants. So along the cycle of all the oil and gas and energy, we can see that produced water is all over. Even in petrochemical plants, the refineries, they all produce wastewater that we have to deal with. So if we look at, for example, what is the lifetime and how does it affect, where does it come from? Just for your information, the time that it takes for any operator globally to actually do an exploration all the way to the first oil sale or gas sale is about 15 years. And mainly the NOCs are the drivers in the world. IOCs like Chevrons and ExxonMobils, they are more on 7 years almost. And after that, there is the golden times of producing. No problem. Production is getting up into about 10 golden years. But the remaining asset life, which is 50 years, this is where the decline of the production starts. And along that decline, there's a big influx of water, which can reach 10 times the production. The other thing is, when we talk about intervention and the technologies behind the intervention, starting at the point of the declination, those wells have to be worked over. So here's a very raw and simple example. If you have an oil concession and you leave it, you don't work it out, your decline rate is 6 to 12% every year. So if you calculate 100 million barrels a day, that means you can imagine the amount of continuous work on these fields, even if all the drilling rigs in the world, they stop. But workover intervention will never stop. So I wanted to be in a consistent, profitable revenue business, which is the focused energy downhole tools, and into sustainability of water, which is a problem that is actually increasing. Since all the concessions, 90% of the concessions in the world are over 40 years in age, which means that the water influx that we're going to be seeing on the upcoming 10 years almost going to double. So how much is the total available market? And this is what we call the water management services, which are 4 categories. And one is water hauling, water disposal, water treatment, and basically produced water treatment equipment sale. That market used to be $37 billion in 2014. It grew to $53 billion in 2020, expected to reach $80 billion in 2030. And back again to the main reason that the assets around the world are aging more and more, and water is being produced more and more. And today, if we calculate where are we on that term of $53 billion, in which of the categories, actually we are all of it, because what we do is we treat the water and we reuse it. So no need for hauling, no need for transportation. We do have the equipment and we do the service for the water. 70% of that 53 billion is in NAM, North America, which makes it one of the biggest potential markets in the world, and it's growing more and more, and that is because of the shales, one of them, frac flowback, and because of the age of the assets. Now, if we take a snapshot of how it looks like on that water treatment, basically it's a patented technology, and it's a mobile container, 20-foot container, that can treat 4,000 barrels a day. It can take almost 9 out of the 10 contaminants, and this is a real picture from a client called Noble and Eagleford, where the contaminant water looks very brownish and all the way it was into clear. That technology in particular was the only technology which was allowed by EPA to dump that water or treated water in Colorado River. It got awarded in 2015. So this is not a startup company, and this is not something not commercialized. It's perfectly commercialized. So if we look at the decarbonization and how it looks like, so are we really involving ourselves into decarbonization? Do we hold that responsibility? And the reason is yes. So the way we know it now, whatever water is produced, it gets separated, crude from water. Then it gets discharged by this pump. It's called discharge pump. Then or transported with trucks, which is even worse when it comes to CO2 emissions. And all the way to an injection pump where they inject the water into disposal wells. So on the levels of pumps alone, and this is what we call scope 2. Scope 2 emissions is basically where these pumps are responsible of getting rid of the water, they do the emissions. If we replace those pumps and we treat the water to be reused in Situ, so that means we're saving about 500 to 750 tons of CO2 per unit per year, which means the total market for decarbonization would be, if we calculate it based on the global 250 million barrel a day, that's about 37.5 million tons of CO2. So this is a double-decker: decarbonization, water sustainability. We look at the other aspect, which is basically the aspect of the geothermal, the aspect of the metal-to-metal power sections. In the oil and gas expenditure, to know the market itself, it's about the intervention market is about $97 billion in total every year expenditure. And this is rising again, back to the aging of the assets, the workover, and the intervention. So our technology contributes basically out of those 97 billion because it's service as sales, that's $3 to $4 billion a year, which is accessible market. We can't claim the service, but definitely we can claim the tools that is responsible for that service. Again, so we have two here, fundamentals, basically that are driven, that drives all the market share, drives the growth, and drives the revenue for the company. So in Focus Energy, which is again a patented technology, mainly we focus on what we call the metal-to-metal motors. Metal-to-metal motors enables the operator to acidize without pulling out, enable the operator to go deeper into hotter holes, like 300 degrees, 400 degrees, and enables the operator to access geothermal with the reduction of cost and the reduction of drilling time. And that is because we're patented. So actually what we are looking into a growth being seen on all aspects of geothermal, which is clean energy, and intervention on the oil and gas. So if we look at the metal-to-metal, it's the new trend where today most of the governments and the operators are asking for development related to hotter holes and for accessibility of the new energy, which is geothermal. Now, on the business development side, and that's a good story, we mentioned Aramco. And the reason why we're mentioning Aramco, Aramco is the #1 producer of oil in the world and has the most stringent laws when it comes to companies that will engage with them. Messaben was established a year and a half ago. And according to Aramco laws, we can't even engage with them before 5 years history. We can't engage with them unless we have also a portfolio of $80 million in revenues. So why would Aramco sign an NDA with a newly established company? It is the technology. Aramco acknowledge that this is the only technology in the world that is so economical in power, energy, in scalability, and mobile that can actually solve their problem of about 10 million barrels of produced water a day only in Saudi Arabia. In that number, we've seen events going even much worse than that. So we signed with them the NDA. We're looking into the unconventionals, into the shale gas, because there is a frac flow back water to develop and to test the units, paid testing, tailored paid testing contract, also on the produced water on their 70 processing facilities that exist in Saudi Arabia. Also, at the same time, since we're talking about produced water and contaminated water, we were approached by NALCO champions, petrochemical plants, to solve their water influx, which comes out of making those chemicals. We can do that, definitely. We've been approached also by Delta Services in Canada. We're now forming the agreement in order to tackle Alberta itself, again, because of the scalability of the technology and the effectiveness of the energy. We have 4 main major NOCs, which is ADNOC UAE, PDO Shell Oman, DNO and Sonatrach Algeria. We are in discussions, and some of them actually they requested to start mobilizing the assets to tackle the challenges related to produced water, and some of it related to polymers, for example, which helps on enhancement of oil recovery. So another company which is listed on the NASDAQ, NACSR, we signed with them a 3-year agreement with a minimum retainer on one of the tools, one of the sizes. The market could be bigger than that. Both Halliburton and Schlumberger also wants to sign the same. ExxonMobil now, we're qualifying the tools with them. They're very receptive with the tools and with the water treatment, especially to be used in the Gulf of Mexico. And we met with the WSI, which acquired all of Schlumberger fishing, downhole fishing services, who wants to sign a master sales agreement. The list goes on and on and on. This is the major highlights in a very short period of time. This is nothing but a proof that the technology is unmatched. So this is the list of, and we're proud of this slide. This is the list of the technologies qualified already with these corporations and companies like ExxonMobil, Oxy, Schlumberger, Weatherford, Toucan, Halliburton, BP. It means that we run also jobs. We sold them. We run services over there. And when we demonstrate this slide, in some of the cases, to get qualified only, get a trial, it needs 3 years. So this is an acceleration to the business. So today, if we say we're going to grow and we need the working capital for resources, we're already there. We're already there on the base of the business plan. We're already there on the base of launching ourselves. All we need is the resources to do it. So what we did is a forecast into the upcoming 5 years, how the company is going to grow. And let's not forget that the 2 divisions already, as they said today, they are, since 2013 and 2014, they are revenue-making divisions. But with the expansion and the acquisitions that we are going to be doing, which we own one of them 25%, so we're going to be taking it from 9 million on year 1 and 34 million, and that jump, that big jump is related to the projects on the water. And any project in the water like Aramco is $43–45 million on fixed assets. And then it's going to go very consistent on the growth year after year. We're looking into profits or net profit definitely at year 1 because we're loading the resources, the bases, we're loading the equipment, inventory. It's going to be at net, at actually a loss. And then after that, we're going to be seeing on at about 12 to 15% of net profits. So the financial forecast is driven by many points. And one of them is it's a continuation of historical customers. As I said before, if you're creating something today, you can just assume that tomorrow I'm going to sell to ExxonMobil or BP. You have to run 2-3 years into qualifying the product. Us, we're there. So if we have the team, we have the resources, we have the location, we can start tomorrow. The second thing is year 1 is a build tier of internal resources, in particular the salespeople. Also some of the bases in Europe, also North Africa. Since we have a base in Dubai, we have one in Canada, and we're regaining the headquarters of Houston. The other thing is we're seeing on year 2 a major revenue increase primarily for InFocus Energy and also on the produced water treatment segment, because we're going to be moving 2 projects, not only mobile units. Year 3 forward is the maturity of the projects. And the beauty about the projects, they are paid in advance, almost all of them. So if any company comes and engages with you for a project of $40 million, they pay 50% upfront, and the milestones until it is constructed over the 2 or 3 years basically are paid until the project is commissioned and delivered. So year 4 and 5 on EHO will depend on manufacturing facilities. We intend to open one in Saudi Arabia, because Saudi has a good regulation related to the local in-country value, which gives a privilege without any tenders, direct sales if we build over there, and that's a major big market over there, because Saudi alone, they spend about $30 billion a year on the oil and gas equipment. And in the end, as we said, the PWT, which means produced water treatment market, is growing at a very fast rate and a big rate, and the increase is happening because of the old asset influx. So in terms of the company itself, basically, the company itself is tightly controlled by the founding shareholders. As you can see, almost 95% of the shares. We have minimal float, which is 2 million shares, and outstanding about 516. Further on, we have allocated additional shares to be used for the 2 potential acquisitions, which is not much, all totaling 1.8 million shares. It's a very healthy company when it comes to the floats, outstanding shares, and I believe that further on, I think it can continue to grow more. So the investment highlights, as we said, it's tightly controlled public company on the OTC with a seasoned management team. All of the team comes from major NYSE companies like NOV, Schlumberger, Baker, and Weatherford. We have exclusive global distribution agreements with US patent technologies on the water treatment and the metal-to-metal. And also the patented on water sustainability technology is driven by EPA and US environmental regulated bodies. As we said before, it is proven in the States because the company is in the States, and it is the only company awarded to dump the treated water in Colorado River back in 2015. The water management market is 6 to 10% CAGR expected to 2025 and much more to 2030. 2 potential acquisitions are under non-binding LOI that will grow the technology portfolio and revenues of Messaben. And Aramco signed an NDA to explore various pilot tests that we started already. We're going to be moving the first one in August, which has the potential for major revenues for the first 2 years. The impact is coming from Aramco a lot. And Aramco is a very good reference towards the world of NOCs. Technologies also have been qualified with the major oil companies, and that's a big driver evading all the time needed to qualify. Thank you very much. For further contact, you can contact myself or Wilson Bradshaw or our advisors via partners. And we're open to questions if there is any. Thank you. Are there any governments? Oh, definitely. So on the water, the grants are there. This is one. The local contents, as I said, to many countries when it comes to reusing the water, because the word reusing the water means you're so economical on the barrel, right? And there is a lot of incentives that are being worldwide addressed to us. But again, it's the resources and how we expand and how to deploy the units, which is a little bit now we are tackling to reach there. Most welcome. Actually, these are the technologies that we talked about. They are embedded with, today we have agreements with them, and some of them we own them. But further on can be a discussion one-on-one, but I highlighted already those 2 acquisitions, it's clear. Well, thank you very much.